Ever since the Indian budget was announced 2 days back, a lot of discussions going on around in WhatsApp about its implication, particularly on the middle class. So one of that memes which caught my eye is this one. So if you get the salary, pay 30% direct tax, and after that you spend, invest, and then it says pay taxes. Basic. This is related to if you buy something that is spends, then it has an associated tax, and then if you also save, then there is also an associated tax. One thing that is of course missing is the EFTs. So that is fixed deposit, which is also taxed. So FDs are missing over here. So investment, I believe they are pointing out to the stock market. So now I thought I should decode it because it's not that this all this taxation is something which is brought new. It is there for ages. It's not something new. So I thought I should decode this first. So the first on the spends, that is, which is basically the indirect tax spend, in the sense when you procure something, then ultimately I think they are this part they are referring to GST. So is GST something which is new, which is brought in? It's not. If you look at the prior GST, there are multiple taxes. There was group of taxes like central excise, service tax. All these are pointed over here. Around 8 to 9 different taxes are there, which is all gave away to a GST. Suppose, for example, if you go for a movie earlier, it was the state government tax. Then they had the entertainment tax was applicable. So many things. State tax was then for a particular state tax. There will be state tax if it is between the states. Its central CST was there. So all this have now been clubbed into the GST. Of course, the percentage, whether it is whatever is mentioned, whether it is 12%, 18%, or whatever, that is something which is decided by the GST board, which is all the representation. The point here is only which is not in the GST, of course, the petroleum and of course the liquor is not in the GST. Each government or each state government wants to have those taxes accordingly. So, in fact, these two items, petroleum and liquor, is not in the purview of the GST. So the point is, GST is not something new. It's there earlier in the sense maybe 30 or 40 years, or even since independence, there were taxes. So I don't know why that need to be mentioned specifically to GST. And now the second point on the investment. Yes, this taxation was introduced, I think, in 2018. That is particularly the topmost part is for the listed asset, which is related to the stock market, and unlisted, particularly for the real estate. The stock market, yes, the short-term capital gains and long-term capital gains was introduced earlier in 2018 or 19. I think most of the many countries across the globe has that kind of a taxation as well. Only thing is there is a different, a slight increase. Earlier it was 15% as far as the short-term capital gains are concerned, and now it is 20% as far as the short-term capital gains, and as far as the long-term capital gains is concerned, it is from 10% to 12.5%. The good thing is, or the benefit for the investor is that earlier the capital gains exempt limit was about 1 lakh. Now it is they have raised it to 1.25 lakhs. So that means if you have invested money, say for example you have invested about 1 lakh. I'm just giving an example, 1 lakh, and it has become up to 4 lakhs or something. 1 lakh probably in 2006, and it has become 4 lakhs. Then better to take till up to, if you're just withdrawing up to 1 point. Earlier it was, if you're withdrawing 1 lakh, then it is not taxable. They have increased it to 1.25 lakhs. So it's in fact it's a good measure also. In fact, that gives you with the long term capital gains exempt limit being hiked. So you need to stay invested for, first is you need to stay invested for a long time in the market, instead of doing any kind of a speculative. That is where the short term capital gains come. Maybe invest a month and then try to go along with the market. If there is a bull market, then withdraw it without doing any kind of an analysis. You just invest, go along with the market and try to retrieve it. or try to redeem it, I would say, then yes, short-term capital gains will be applicable. And yeah, but whereas if you are invested over a period of time, the short-term gains is applicable for a period of 1 year. Whereas long-term capital gains, if you have invested more than a year, it is called the long-term capital gains. So stay invested for more than 1 year, yes. And if you make a profit, then yes. And if it is over and above the redemption amount of 1.25 lakhs, then yes, you pay the tax. Suppose you have withdrawn 1.5 lakhs, then over and above 1.25 lakh, which is 25,000, that gets taxed. But there is a technique of grandfathering as well. Not getting into that, but yes, kind of an indexing, which is based on 2018. So that way, you might still be within that limit, 1.25 lakhs limit. Then you don't pay any long term capital gains. So have that in mind while you are taking out the money. The other one is real estate. Real estate, earlier it was 20% the long term capital gains with a point of indexation, and now they have removed the indexation as well. So the indexation concept is that it takes into inflation. Now it is direct 12.5%. Earlier it was 25%, 25, 20. Now it is 12.5%. No, though the taxation is reduced because the indexation is changed. Indexation, they have removed the indexation. You might end up paying higher taxes, even though it is 12.5 only. Earlier it was 20. Now it is 12.5. But still you will end up paying more taxes. But then, if you are reinvesting your real estate. I have an apartment. Maybe I procured in 2008, and now I sell it. But then I want to move to a spacious apartment. I reinvest it within 2 years. Then it doesn't attract capital gains. That clause is there. So this one should not worry about 20%. Or in a way, it is good that if you are investing in a real estate, because real estate is something like kind of it can attract I mean, the people will hold on to the real estate, speculate and make it higher. So to avoid that, yes, taxations are there. Otherwise, if you want to procure an apartment for your own use, you are welcome to do it. And initially you purchased a single bedroom apartment or two bedroom apartment, you still want to move it to a spacious apartment after 7 to 10 years, you could still do it, sell it, no capital gains, because you procure it again, purchase a bigger property, then reinvest it. So there is no long term capital gains. So there is always pros and cons. Yes, there is this I would say it's a kind of an advantage for people who want to use the apartment for their own use. They want to sell it and procure it, then yes, long term capital gains doesn't happen as well. And then if you're looking for a salaried class, there's a new regime and old regime. New regime looks attractive, particularly if you're going to have only the salary income, because what they have done is that they have increased the standard deductions from 50,000 to 75,000. So this looks attractive. But I always recommend that you have the other sources of income, maybe from the share market, or if you're doing other freelance work or something else you are doing. Yes, it is always, I would recommend use the free tax calculator, which is available in income tax site or any other sites these days are available. Check that, or you consult a tax auditor, and they can give you which would be beneficial, whether it is new regime or old regime, and then take a call, particularly if you are having other sources of income like your business income, or from the stock market. If you have other income, yes, probably you can check the IT tax site or any other site, use the free tax calculator, use the new regime and old regime, or consult with the appropriate financial consultant and take a call. The other one is customs duty. This is one more thing. They have reduced custom duty, which means the gold prices will go down. Yeah, which is in fact good. The gold prices is at an all-time high, so it will be good. And there is cases of smuggling also happening in recent times. So if you make it lesser, just 6%, then in that case, smuggling doesn't or evading customs duty, instead of smuggling, I should use the word avoiding customs duty, doesn't look attractive, because just 6%. So you can import the gold through proper channels pay the customs duty because now it is going to attract only 6%. So in all, it's kind of to me, it is it's not that kind of this is happens. I mean, all budgets have their own taxations. There is always changes, modification, which is always happening. It's always an evolving process. It is not that these taxations are introduced. It is happening. It's an evolving process. So that way, I think you have a clarity as what was there earlier, particularly on GST with other taxes, and how the capital gains works as well. So thank you, and do subscribe to my channel if you're not subscribed. Thank you. Cheers.